Hey everybody, Ijaz back with another video. So Coinbase released their Q2 2021 earnings yesterday and they absolutely smashed it. So I've downloaded their 8K. Let's go for it together for the first time. This is the first time I'm flicking through this. Let's go for it together and let's point out some of the highlights. So what do we have here? So let's flick through. And they start off with their shareholders letter, which is typical. Q2 was a strong quarter for Coinbase with growth and diversification across our platforms. Retail monthly transacting users grew. Fantastic. That's what we wanted to see. 8.8 million is actually on the higher side than what we expected. Remember, they gave a range up to 9 million by the end of this year. So that was a phenomenal beat. Verified users were 68 million. Remember, it was about 56 million on the previous reading. So that's tremendous growth. This is the big point now, and we do want to dig in a little deeper into this. We have 9,000 institutions who continue to deepen and broaden their activities in the crypto economy and more than 160,000 ecosystem partners. Okay, we generated 2 billion in net revenue, which is higher than the 1.8 which we were looking at, which is fantastic, and 100 million in subscription. Again, something we want to delve into is this subscription model. Can we take a look into, are they increasing other revenue streams as opposed to just the transaction fee? So we will spend some time in that shortly when we get into the numbers. Q2 illustrated the volatility we have anticipated in these still early days in the crypto economy. Fine. For example, the price of Bitcoin surpassed 64,000 in April. Exactly. And this is what makes this set of earnings so impressive. Is we said this in the what to expect video before the earnings came out. But it was a weak quarter. It was a very bearish quarter for the crypto market. So for these guys to be beating revenue expectations in a bearish month where you feel like transactions would be reduced, that was impressive. Net income was 1.6 billion, and adjusted EBITDA was 1.1 billion. Again, phenomenal. So that is very impressive. For them to generate 1.6 billion in net income from 2 billion in revenue. I want to look at this because that is a phenomenal margin, and it'll have a lot of investors licking their lips. Fine. So we spoke about that. That's fine. Across the industry, we see immense innovation with new crypto projects addressing a broad range of issues, from scaling to improve transaction speed, lower cost, to developing novel ways for borrowing and lending. New market entrants are joining the crypto economy. So yeah, we addressed that. The competition. The Coinbase are not the only player in town now. As we saw first with the Sotheby's auction. Yeah, fine. Most recently, crypto's arrived in the US. Regulatory agenda. We discussed that as well. How's he going to tackle the stance by Gary Gensler and the senators with the infrastructure bill? We are proud of the broad crypto community for coming together in an incredible, powerful way to inform debate in the US Senate. Great point. Against this dynamic backdrop, we remain focused on our mission to increase economic freedom. Fine. Right, let's look at these metrics. Key operating financial metrics. Okay, so they've managed to summarize these, and we'll go into these in a little bit more detail. I want to take our time and go through this 8K together. So what you can see is they listed out the quarter starting from Q2 2020 to the same quarter this year. Okay, so they've listed that out for us. Let's make my highlighter a bit thinner. So you can see the monthly transacting users has just steadily ticked up. If you just take that box there, you can see that we've gone from 1.5 to 2.1, 2.8, 6.1, massive increase there. As you know, that was as Bitcoin started surging up to 60,000, 64,000, and that's when Coinbase IPO'd in that euphoria. But then they still managed to tack on some more, which is phenomenal. For them to be able to tack on some more in the light of that is really impressive. So look at their trading volume as well. This is just phenomenal. 28 to 45, 89, the exponential increase to 335, but they've maintained that. Everybody's just expecting it to stay the same, if not drop a little bit, but they managed to increase by another 130 odd billion in trading volume. So this is very impressive. Assets on the platform have continued to increase. So all of this is showing you, this kind of a growth where the big month there, and then it's maintained it again. So that is looking really impressive for Coinbase. And that's translating through to the financial metrics, because net revenue, this is just where you see it's ridiculous. The net revenue, just the same quarter last year was 178 billion. And now, 178 million, and now it's 2 billion in that same quarter. Guys, that is phenomenal. That's more than a 10x. And if you look at how that's translating to net income, their margins improved at the same time. This is phenomenal. If you look at that as a percentage of the, if let's do that together, we can do the 32 over 178. Okay, so 32 over 178 is giving you 17%. And if you do the latest now, which is your 1606 over your 2033, you're getting 78% margins. How? Like, how have they managed to do that, to go from 17% to that kind of a margin? That is phenomenal. So we want to understand that. How have they managed to do that? That's what we want to look at. So let's carry on. Let's see if we can get any more nuggets in here. Q2 MTU Growth was driven by the crypto market environment. Yep. Product launches. Overall, we are seeing that retail users are deepening their engagement with our platform. Really important. This is what we wanted to hear. This section here. We want them to deepen their relationship with the platform. That's exactly what we want. Okay. Now, approximately 27% of our Q2 retail MTUs, or 2.4 million individuals, both invested and engaged with at least one other non-investing product. Massive. So we need to understand what that means. Remember, the transactions are the bit we want to diversify away from. If we're Coinbase investors, which I'm assuming a lot of us are, then we want to diversify away from just these transactional revenues. And the fact that they're saying 27% of their monthly transacting users are now using at least one other product, that is brilliant. And we'll come on to see if that's actually coming into fruition in the numbers. And I really hope it is. This is up from 25% in Q1, 1.5 million. So they've gone from 1.4 to 1.5. Okay, these incremental 0.9 million retail MTUs are predominantly using staking or earn, which allows them to earn rewards or a yield in their crypto assets. Okay, so that seems to be their main goose now. They're getting people in with the transaction fees, they're buying crypto, Bitcoin, Ethereum, and then they're trying to get them to stake or earn as the main service of all the different services they offer. On the institutional side, we now have over 9,000 institutions using Coinbase. Several important themes. So they're saying, first, adoption continues at a rapid pace through the quarter despite market volatility. Yep, fine. We are encouraged by the progress we've made over the past years. We build our institutional suite. As an example, 10% of the top 100 largest hedge funds by reported assets under management have chosen to onboard with Coinbase. Massive. 10% of the top 100 largest hedge funds have chosen to onboard with Coinbase. Massive. That's really big, and a really big bow in the feather in the cap of Coinbase. In addition, in recent months, we have performed partnerships with industry leaders Elon Musk, SpaceX, Tesla, Third Point, and Wisdom Tree. Okay, big. Second, institutions are becoming more sophisticated and seeking to do much more than buy, sell, and store Bitcoin. Interesting. Bitcoin, increasingly, our institutional customers see Coinbase as a one-stop shop for the services they need, including trading, custody services, lending, yield generation data across a broad spectrum of crypto assets. Interesting. Institutions are choosing Coinbase for the deep pools of liquidity we offer, our sophisticated algorithm, order execution, as well as the trust that comes with being a public company. Okay, third, we are seeing a growing number of customers leveraging our infrastructure as they create their own crypto offering. These include traditional banks. So here they're probably referring to, are they referring to CBDCs? This is an interesting one. Can we interpret this as being that governments are looking to utilize Coinbase's setup to launch their own CBDCs? Can we interpret that? Fintechs, best custody crypto trading. Overall, we're excited by our increasing momentum with institutions and the opportunity to grow. Cool. Let's carry on. International expansion is also an important leg of our user growth strategy. Yep, consistent with our vision that the crypto economy can unlock economic freedom around the world, we remain focused on making the long-term investments necessary to join Coinbase expansion. So they talk about Japan, Germany, fine, listing more assets and trading pairs. This is another important point. The crypto economy is still in its early stages, but it's clear that every year more and more economic activity will take place on crypto rails. We are seeing crypto quickly mature from its initial use case of trading Bitcoin to the trading of thousands of new assets and the adoption of new cases like DeFi, NFT, smart contracts, and DAOs. We spoke about that, and we really felt that this would be an important piece for Coinbase, because previously Coinbase, people wanted to buy Bitcoin, they wanted to buy Ethereum, and they used Coinbase to transact and perhaps store it there as well. But now we've seen the rise of Ethereum, DeFi, NFTs. People are starting to game on Ethereum, and with the London hard fork and EIP 1559, we're hoping that would lead to even more people using these, which should be good for Coinbase. With all of this new innovation coming to crypto, we have massive opportunity. Cool. Throughout Q2, we continue to enhance the depth and breadth of the assets we support. Yep, we've seen that. Coinbase are listing a lot more coins. Before, they were very, particular about which coins they wanted to launch. But now they're really starting to ramp it up and get a lot more coin pairs on. Overall, we executed well against this goal as we added 29 new assets for trading and 39 new assets for custody. In Q2 alone, we added more assets for trading than we added in all of 20. That makes sense. You can clearly see by the announcements that they're making of, we've added this coin, we've added this pair, we've added this asset. It's a big focus of theirs now, and they weren't doing that in 2020. They were very particular. They wanted that Coinbase effect, which is a very clever branding strategy as well. In June, we outlined steps that we are taking to improve our asset addition process. First, we are simplifying our legal review to focus specifically on what raises the most concerns under the law. Second, we need to create an experimental zone for new assets where we can appropriately disclose risk to customers and enable them to make educated decisions. Fine. Building innovative products. We continue to invest in innovative products that attract new customers and deepen relationships with existing ones. So this is about them increasing... They want to increase the lifetime value of a customer, LTV. Because, like we said, they've got the transactions, and now they want to add on all these other pieces on board. So we can see they've got a few different things here. Let's go through. So they're saying they've got blockchain rewards. Coinbase now offers reward opportunities across 6 tokens, including free proof-of-stake protocols. In April, we launched ETH2 staking, which drove staking adoption, and we ended Q2 with 1.7 million customers. 1.7 million customers earning yield on their crypto assets with Coinbase. With Ethereum being the second largest crypto asset by market cap, our ETH2 staking products drove our blockchain rewards, primarily comprised of staking, to increase more than 300% in Q2 compared to Q1. Okay, good. They then got education, Coinbase Learn, which we launched in Q1. We have developed several ways to help better educate our users about crypto. And this is very smart. Remember, they need to educate so then people can use the other services. If they can educate you about staking and yields and all these other different things and ways and custody, then they can make more money through that. They've introduced the Coinbase card, which we've seen a few different other platforms do. We've seen the crypto.com card as part of our goal to become users' primary financial account. Look at that. Our goal to become our users' primary financial account. So think about it. At the moment, what's your primary financial account? You know it's probably JP Morgan, a Chase account. In the UK, it's probably Barclays or Santander or one of these platforms. They want Coinbase to be your primary financial account. They're not saying primary crypto account. Okay, so it's very interesting the verbiage they're using here. We started inviting US-based users to apply for a Coinbase card in Q2. Okay, good. Coinbase account have more than 70 million merchants where Visa debit cards are accepted. Very good. We know that. Let's keep going. Institutional. Okay, so what are they offering institutions? We launched the beta of Coinbase Prime, our prime brokerage and integrated solution that includes trading, secure custody, financing, yield generation, data, and more for our institutional clients. Custodial fee revenue grew from 31 million in Q2 up 35% compared to Q1. Massive. Okay, so they're 35% up on custodial fees. So they got institutional data. In May, Coinbase acquired Skew Limited, a leading institutional data and analytics platform. Skew serves as the foundation for a superior intelligence offering for our users, arming professional traders with dynamic aggregated market data. Financing, we have begun building out a robust financing business, offering bilateral lending and post-trade credit to our institutional clients. Our retail-focused borrow product has also seen growth, with customers now able to borrow up to 100K against their existing crypto holdings. But we already know this is, I don't know what the ratio is they use, but it's not 1-to-1. Okay, so if you have 100K of Bitcoin, you can borrow less than that. It's probably like 20K of dollars for every 100K of Bitcoin or crypto. Ecosystem developers, Coinbase Cloud, USDC. Our USD stablecoin issued via our partnership with Center experienced rapid growth in Q2. USDC market cap is currently over 27 billion, 6 times higher compared to the start of the year. Stablecoins like USDC increasingly a key component of the DeFi ecosystem. Yeah, we're not going to get into the re-hypothecation conversation just now. Looking ahead, the crypto economy continues to innovate at a blistering rate, and we see significant opportunities for growth and investment as we execute our goal of getting 1 billion people into crypto. Okay, so that's 68 billion at the moment. 68 million verified users. They want to get to 1 billion. So they've got at least another roughly 20x to do in order to get to that goal. Okay. Now, first, ensuring we are scaling to match industry growth will be an ongoing area. We must continue to deliver consistent platform performance, even at the highest levels of volatility. Okay. Second, the crypto economy continues to grow rapidly, including proliferations of assets. Yes, we know this. DeFi, DAOs, NFTs. We've discussed this already. They want to bring more assets to Coinbase. They want to ship more to other international markets, and they want to integrate with other third-party interfaces, which makes complete sense. And then, obviously, the regulatory hurdles, which we know about. Right, let's get into the financials. Okay, so these are the key metrics. Let's take a read. So you can see here from Q2 of 2020 to Q2 of 2021, the retail trading volume has ramped up. Okay, so these are in billions. You can see it started at 11, 18, they doubled to 32, quadrupled to 120, and then they've added some more at 145. Okay, so we're getting a very good growth there. But here's what's important. Look at this. Institutional at 317 is now more than double retail. Okay, look at that. It's now more than double retail. So they've managed to really grow their institutional trading volume at an impressive rate. And it's not like retail is slowing down. Retail is ramping up nicely. Institutional is ramping up nicely, and that's why we're getting a nice ramp up in total. And if you look at the percentage, we discussed this in the video before the earnings, we want to see some diversification away from Bitcoin, Ethereum. So we saw from the previous quarter, 39% in Bitcoin, 21% was made up for Ethereum. The Bitcoin has gone down to 24%, which is fantastic, but Ethereum has gone up. And I'm not surprised, given NFTs, given gaming and DeFi. Okay, given those, it's no surprise that Ethereum has ticked up slightly and Bitcoin has fallen a little bit given the bear market we saw. And we've seen people have just been moving into other assets, which has grown to 50%, which is very impressive. Before you're looking at 60% plus in just, let's look at it here. Let's go just 1 year previously, 57 plus your 15, so you got 72% was in Ethereum and Bitcoin. Okay, 72% was in Ethereum and Bitcoin. And now we're at 50%. So it's a good trend. We're diversifying out. That's really important. Trading volume in Q2 was 462 billion, an increase of 38% compared to Q1. Phenomenal growth, guys. This is what you call a growth company. You're not going to get this from your dividends. Total retail trading volume was 145 billion, an increase of 21% in retail. Comprised 31% of total trading volume. Growth in retail trading volume was driven by higher MTUs, a strong crypto market environment, product innovation, and our ability to support more assets. Okay, so they're saying the mix of those things are what are causing their existing users to trade more with them and increase their volume with them. And I think this is an interesting thing is as people start to trade in crypto and they get better and their portfolio sizes get bigger, naturally the trading volumes are going to increase as well, which is very interesting and useful for Coinbase because their fees are just going to get greater the more you trade. Institutional volume comprised 69% of total trading volume, up from 64% in the quarter. Institutional onboarding on Coinbase platform increased rapidly, as well as higher capital allocation. So they're seeing two things from the institutions. They're saying more companies are onboarding with us. We're getting quicker at getting them onto our platform, but also they're actually allocating higher amounts of capital. So they're saying that those that are choosing from the institutional side, they're coming in with the big bucks. They're not playing around, touching around with the small amounts. They're going straight in. In Q2, our total trading volume continued to diversify beyond Bitcoin into Ethereum and other crypto assets. Approximately 24% of our total Q2 trading volume was concentrated in Bitcoin, down from 39%. We just discussed that from that table above. And this is really important. And they're going to say, we believe this shift is influenced by several factors. Please explain. First, a modest decline in our Bitcoin trading volume as total Bitcoin volume dropped as a percentage of, So we know that BTC dropped in price. We know that was one of the factors. Second, meaningful growth in Ethereum trading volumes. So again, we discussed that. That's your NFTs and DeFi gaming, which led ETH to go up. So we had BTC down and we had NFTs driving Ethereum volumes up. And third, the fact that they were adding new assets contributed to the shift we saw. Okay, so that's what we're seeing. So we're seeing a diversification away from Bitcoin. They're saying the Bitcoin one wasn't really intentional because less people were trading Bitcoin due to the bearish nature of it. And they're saying Ethereum trading went up with stronger Ethereum trading due to NFTs, DeFi, and also the fact that they're adding new assets and new trading pairs. More people are getting involved in those. Now let's look at the total assets on the Coinbase platform. So we want to see, and again, we mentioned this in the video, this is one of the key things for us to look at. We want to see growth in the assets on platform, and we want to see a strong retail as well, and a diversification out. So again, assets sitting on the platform, retail has fallen, okay? So this means more retail users have become savvy at removing from exchanges, okay? And the reason for that is we saw what happened with Binance. We saw a few issues with some of the regulatory concerns. So a lot of retail traders are getting more familiar with removing their amounts off exchanges, okay? And we saw that with institutional falling as well in terms of assets on the platform. So we saw that as a decrease. Now, if you look at the diversification of that 180 billion on the platform, that is split by 47% in Bitcoin, 24%. So you can see that's down from 62% on Bitcoin. It's doubled almost on Ethereum, and other assets is grown nominally, but obviously it's a percentage-wise, it's remained flat. Okay, so it's good news. We're diversifying away out of Bitcoin, Ethereum. Although I feel like this is going to trend. If we were to do Q3, my projection would be Bitcoin would be flat. You probably still have a growth in. You probably still have some more growth in Ethereum because Ethereum's not going to go anywhere. Everyone's transacting on Ethereum. We've looked at that. We've looked at the statistics together on previous videos, whether it's Axie Infinity, whether it's Uniswap for the DeFi, whether it's any of the other platforms that are being used, NFT platforms, everything's going through Ethereum. As of June the 30th, 2021, assets on platform totaled 180 billion. Yeah, we've seen that. Crypto assets on the platform represented 11.2% of the total market cap. It's phenomenal. Okay, they're holding 11.2% of the total market cap of crypto. We saw billions of dollars of net asset inflows and new customers added throughout Q2. Okay, let's look at the transaction volume. So total transaction volume. So we can see that retail, the transaction volume went up, which is fantastic. And we can see institutional has gone up as well. Okay, this is more than we were expecting. And that's what's led to the 1.9, which is a beat on what we expected in transactional volume. The remainder came from the subscription volume. This is where we wanted to see that diversification. We know this is strong. Coinbase are strong at this, and they've had phenomenal growth. Even better than we expected. But what happens if a player comes to the market who says, we're going to do free trading? What if the Robin Hood of crypto comes in and says, we're going to do payment for order flow? What if there is something that comes in with zero commissions? That's the fear here, because then this gets wiped out. This whole section here gets wiped out. So this needs to grow. So let's look at this. Custodial fee revenue. Let's look at the custodial fee. So that's increased. Good. So we've had a good increase there. Blockchain revenue, good. That's quadrupled. Very good. We've seen an increase in the earns. We've seen interest income go up. And we've seen other subscription remain relatively flat. But overall, we've had a doubling. We've had a doubling in our subscription services revenue. Look at that. So you've had a 33% increase here, but you've had a double on this, and this is what we wanted to see. This is really impressive. Even if the transaction volumes were remaining flat and we're seeing this kind of growth, that would be very interesting for us, because that makes an exciting business model. Because this is where you're proving that if you can get people into the Coinbase funnel, they'll spend more as the longer they stay in that funnel, and that's really important. That's a really bad funnel, but you get the point. Q2 retail transaction revenue was 1.8 billion, an increase of 26% compared to, that's massive, 26% increase in retail transactional revenue. Institutional transaction revenue was up 20%, very good. And let's see if we can go to subscription. Subscription Q2, subscription services revenue, what, for 82% on subscriptions. Custodial fee revenue grew to 32 million. As average Bitcoin price for Q2 was similar to Q1. Okay, fine. Blockchain rewards were 39 million in Q2. Blockchain rewards are generated through our interaction with various blockchain protocols where the underlying blockchain is providing rewards to the user. Historically, these revenues were generated exclusively through staking. However, we are now including inflationary rewards, our community rewards, into blockchain rewards, which were previously included in other subscription services revenue. Fine. Earn revenues grew to 17 million and were driven by 9 active paid campaigns. Very interesting. So they're saying, look, we're getting an ROI on these campaigns we're running. Let's take a look at their OPEX. So we're 26 minutes in. Let's see if we can spend some time on their OPEX. Total operating expenses in Q2 were 1.4 billion. Transaction expenses were 335 million. Obviously, that's going to go higher as you increase the volume, which is not an issue. It's a good problem to have. Technology and development expenses of 292 million, driven by increased product and engineering and headcount. Sales and marketing expense of 196 million, driven by performance and marketing spend. Again, that's good if people are hitting their targets and you're having to pay bonuses. It's a good problem to have. General admin expenses were 248 million, primarily driven by headcount. One-time direct listing. Again, this is what we mentioned. I think there was about $35 million of one-off for when they direct listed. Okay, that's from their direct listing. And we continued to significantly grow our team in Q2, adding over 450 net new employees, ended the quarter with 2,000 full-time employees. Fast-growing company, guys, fast-growing. All these lines are growing in terms of OPEX, but we want to look at them as a ratio because at the end of the day, they're still spinning out the net income. That's what we want to see. So let's look at these OPEXs. So we can see that, let's monitor these. We can see transaction expenses have gone up. It'd be interesting to understand how as a percentage of revenue has that gone up, because we can see that it's trending up, but you would have thought that they got economies of scale. So I would have thought that would trend down. It's be interesting one to look at, see if we can do some more research. Technology and development, that's that they've put that up. They're spending more. Whether those are capex in nature and one-off would be interesting. Sales and marketing, okay, that's spinning out 10% now. I'm assuming a lot of people hit their bonuses, and then general admin, I believe that's where 35 of the 1 point of the direct listing would have gone into there, because that's a double in the SG&A. And therefore total percentage is sitting at 67% in Q2. Now, it's difficult to look at operating expenses just one quarter. You can get so many one-offs where you can just throw off your numbers. It's better to look at this at least on a 6 months, if not a yearly, just to get an idea of kind of where it's moving. Now, Q2 net income was 1.6 billion. Q2 we recognized a tax benefit of 737, primarily as a result of tax deductions. Okay, interesting. So they benefited from quite a bit. They realized 737 million in there. That's based on SBC, stock-based compensation. Our average fully diluted share count in Q2 was 248 million. In Q2, adjusted EBITDA was 1.1 billion. We ended Q2 approximately 4.4 billion of cash, inclusive of 1.4 million net proceeds. Okay. We intend to prioritize the reinvestment into the business. Yes, we know that. I hope so. Right, let's spend a few minutes on Outlook. So we've got, it's important for investors to remember that our business is inherently unpredictable. MTU's trading volume and therefore transaction revenue can fluctuate potentially materially with crypto asset prices and crypto asset volatility. As a result, revenue is difficult to forecast. Okay, so we've known this from Coinbase. In July, MTU's and trading volume was 6.3 million. Fine, and they're not giving us any idea. August month-to-date retail MTUs and trading volumes have slightly improved compared to July levels, but remain lower than early in the year. Okay, giving us a few clues on direction. We're updating our full year MTU scenarios to reflect. Okay, we look forward to that. Possible scenario is high. They're saying 8 million. This scenario assumes an increase in crypto market cap and moderate. Okay, interesting. Mid is 7 million. So they're saying 8, 7 is the mid, and low of 5.5. Okay, so that would be a decline with people moving off and not actively trading. Okay. So they're expecting average net revenue per user varies period to period due to fluctuations in crypto. Yep, that makes sense. Given this short-term volatility, we focus on annual averages. Over the last 2 years, we have seen average annual net transaction revenue between 34 to 45, with the low end of this range occurring in 2019. Okay. We continue to anticipate that annual average will exceed this historical range. Okay, so they give this, being a bit coy, they're not giving a number, but they expect average net revenue to increase. Institutional revenue, they're saying it's unpredictable, but we expect meaningful growth. Okay. Expensive, we have no updates to our expense outlook. Looking to the full year 2021. To scale operations, we're going to, so they're saying, look, we're going to keep spending. Okay. Tax, we'll skip past. Closing thoughts. Q2 was a strong quarter for Coinbase, with a record number of users engaging more deeply in our products and services. A recent survey from the University of Chicago suggests 13% of Americans have traded crypto assets in the last year, compared to 24% for stocks. That is brilliant. Look at that. Given how nascent a technology crypto is, the fact that they've managed to do that is really impressive. However, the crypto industry continues to evolve rapidly, and we anticipate volatility in our industry. Fine. First half of 2021 has been tremendously productive, successful for Coinbase. We're excited to see continued growth. Nope, we don't look at that. Right, this is what we want. Let's skip the balance sheet. No, we can look at the cash. So they got 4 billion in cash there. And they've got 9 billion in customer custodial funds, and therefore 14 billion total current assets. And then liabilities, mainly in the customers. Fine. That nets off with the custodials. Fine, so we're in a good position. Good position on the balance sheet. Let's flick on to, so this is your Q2 2020. That's your Q2 there. You can see that's massive growth, up to 2 billion there. We can see, which is really good. And then I just want to get to net income just to finish this off, because we did see that's your massive growth there from 64 million to 2 billion. That is phenomenal growth, guys. So look, we'll leave that there. You guys can go through the full 8K in detail, but overall is a massive beat. Beat on transaction volumes, beat on monthly transacting users, beat on the average revenues, increase in the institutionals, diversified away from Bitcoin, whether intentionally or unintentionally, and we're seeing other subscription revenues really start to increase. So a really good set of earnings for Coinbase, which is more than I was expecting given the bearish quarter we saw in crypto. Hope you enjoyed the video. Feel free to download that if you're invested in Coinbase and go through that. It's really good practice to start looking for the things which you need to know and understanding your investments in detail. And we'll see you in the next one.